This is Chris Whalen, CPA, and welcome to my podcast. Today we're going to be talking about the new tax reform and its impact on families. Since the Tax Act was passed, I've been developing detailed scenarios based on real-life fact patterns so I can educate my clients as to what the ramifications are of the new tax laws within various income brackets and with varying itemized deductions. My goal here is to answer the question I've been getting almost constantly for the past month: how will the new law impact my income tax bill? You will see that the impact may not be severe, but in fact it may produce a net decrease in total tax. In this case study, we'll discuss a family of four with an income of $100,000. I would like everyone to take a look at the spreadsheet that I prepared. It should be on the screen in front of you. Let's take a look at what this means in real dollars with real facts. Again, we have a family of four, two parents, two children, and the combined wages of the family are $100,000. In this example, I've taken a family that are not homeowners in 2017, but they are contemplating buying their first home. If we look at the 2017 column, we have the wages of $100,000. We have no itemized deductions, but we do have the standard deduction, which is still in place at $12,700 in 2017. We also have a personal exemption for four people for a total of $16,200. So we see that the taxable income is $71,100 and our tax is $9,736. They will also get a child tax credit of $1,000 per child, or $2,000 total, which brings us to a net tax of $7,736. I am sure everyone can follow along with that. It's a very standard situation, no itemized deductions, they don't own a home yet, they are renters. So now what I've done is made two 2018 columns for you to review here, because I want to see apples to apples. If this couple and their family filed without buying a home and still did not itemize, what would the tax implications and or savings or new amount due be? I also wanted to show you, as I deal with a lot of real estate agents, I wanted you to see if this couple did buy a house and did have some standard itemized deductions now in 2018, what might the tax situation be? So now let's start with the first 2018 column, the middle one on your screen, which has no itemized deductions. Just like in our first column of 2017, we just did a minute ago, we have no itemized deductions, and let's look at some of the changes that are impacting that family. First of all, we look at the standard deduction, which is now up to $24,000, up from $12,700. That seems like a tremendous benefit, but they've removed the personal exemptions from 2018. We used to have $16,200 of personal exemptions, and they've gone away. So if we look, our taxable income is actually higher than it was in 2017. So if we take a look at the taxable income for 2017, it says $71,100, and our taxable income for 2018 is actually $76,000. So we might think, oh no, this could be a significant problem and that we're going to have a higher tax, but actually the way that they've reduced the tax rates and changed the tax tiers, the 2018 tax is actually lower. So if we look, the income tax in 2018 is down by almost $1,000 to $8,739. That example is very apples to apples. No itemized deductions, everything else being the same. They're going to save $1,000 in 2018. But there is a very significant change that we have to talk about, the child tax credit. Last year they received $1,000 per child, but in 2018 that doubles to $2,000. So we see $4,000 on that line as a credit. Now the net tax for the family is down by almost $3,000 to $4,739. Okay, so now let's compare 2017 where they were renters and in 2018 where they are now homeowners. I am getting this question very often. What will happen? Is it worthwhile for them to buy a house? Won't our tax situation be worse? Let's ignore the middle column now and simply look at the outside columns. We have 2018 now, they have bought a house, and we have a full year of itemized deductions. If you look, they have state taxes, which are state income taxes they pay to New Jersey. They have $6,800 of property taxes, $15,000 of mortgage interest, and now they can take charity, which I added at $1,500. They might also be able to take some medical, but I didn't show any as I'm trying to be conservative here. So they have total itemized deductions of $26,500. Remember, they do not get to take a standard deduction because you can take either the larger of standard deduction or the itemized deduction. In this case, again, there are no personal exemptions as they were eliminated in 2018. So we simply have our taxable income is calculated as $100,000 less $26,500. It brings our taxable income down to $73,500. And now the tax on that is $8,439. So let's compare that to the 2017 column income tax of $9,736. We see that we are definitely saving about $1,300 from 2017 as a renter versus the 2018 homeowner. That's significant savings if you just compare those two columns, but we have to consider the changes to the child tax credit again. We still get the $4,000 credit instead of $2,000, so our net tax is only $4,439, down from $7,736 for a real tax savings of almost $3,300. To me, that is significant enough for me to advise them to buy a house today. But we should also look at the middle column still and see what would have happened if they stayed as renters. The income tax in the middle column before child tax credit is $8,739. Even if they didn't buy a house, they would be saving about $1,000. So either way, this couple earning $100,000 with 2 children, in either scenario of staying renters or buying a home, is going to save money, but they definitely save the most by buying a home in this example. Of course, this is only an example and every situation is different, and that's why I highly recommend anyone with a concern, such as people thinking of buying a home, to engage my firm to do a custom analysis for them based on their personal facts. As always, I appreciate you listening to this podcast. I hope you found it informative and worthwhile. Do you have any tax, accounting, or business questions? Please contact me via my website at chriswhalencpa.com. You can also reach me via email at chriswhalencpa@gmail.com. And call me directly on 732-673-0510. Thank you again, and I'm looking forward to answering all of your questions.